Welcome! You're viewing the video version of the Santu Pirls stock market commentary, featuring the proprietary bull bear point and figure market breadth summary chart for June 26, 2016. Market breadth. With this past week's market decline, our bull bear point and figure ratio fell to 0.68 from 1.10 last week, falling into bearish territory. The total count of securities in bullish or bearish patterns increased 11% to 3,091. The count of bearish stocks increased 39%, while the count of stocks in bullish patterns decreased 14%. The Santu Pirls P&F Market Breadth Summary Chart shows us a market now 1 week in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the email version of the Santu Pirls Stock Market Commentary, free of charge on a weekly basis, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 70 points for the sixth decline in 19 weeks. At a positive 93.30 points, it continues below all 6 highs above plus 100 and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in distribution mode on higher average daily volume. Momentum. At Monday 6:20 close, the CCI 20 daily had 6 consecutive days below zero to begin a Woody's downtrend. At Friday 6:24 close, we had a zero line reject short entry signal. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 8 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. After last week's successfully completed long trade simulation, the CCI 20 weekly fell to a positive 7.60, falling within the plus or minus 50 range, creating the possibility of a zero line reject trade simulation if the markets rise this week. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: precious metals and REITs on top, banking and brokers on the bottom, tech mixed. Bullish, disk drives continues in and now leads the top 5. REITs continues in the top 5. Bearish, KBW Bank and brokers continue in the bottom 5. Networkers has entered the bottom 5. Gold and silver continues in the top 5. Focus this week from libertyblitzkrieg.com by Michael Krieger. Brexit equals the death of the technocrats. The following are some key points. My political opinions lean more and more to anarchy, philosophically understood, meaning abolition of control, not whiskered men with bombs. The most improper job of any man, even saints, who at any rate were at least unwilling to take it on, is bossing other men. Not 1 in a million is fit for it, and least of all those who seek the opportunity. That is a quote from J.R.R. Tolkien. What transpired last night in the United Kingdom represented one of the most extraordinary expressions of democracy in my lifetime. When faced with an event of such monumental significance, it's difficult to pick any particular direction for a post like this. I have so many thoughts running through my mind, and so many angles I could potentially address, it's simply impossible to do them all justice. As such, I've decided to focus on one very meaningful implication of Brexit: death of the technocrats. From the Telegraph. On Friday night, during an interview on Sky News about the EU, Faisal Islam challenged the Justice Secretary to name a single independent economic authority that thought Brexit was a good idea. Mr. Grove's response was defiant. "I'm glad these organizations aren't on my side," he said. "I think people in this country have had enough of experts." Being an expert does not make you infallible. Your credentials should certainly offer you a seat at the policy-making table. But from that moment on, you had better demonstrate performance. It's the same way with a corporate job. The resume gets you in the door, but your production, day in and day out, keeps you in the seat. The status quo doesn't see things this way. To the status quo technocrat, this is a lifelong position. They consider themselves to be the wise, indispensable elders required to steer the world in the appropriate direction, irrespective of any and all calamities they cause along the way. Unfortunately for us, history shows us that the biggest disasters happen precisely when you combine such expert arrogance with unbridled power. The leadership of LTCM was hailed as the best of the best from the beginning, and expectations were high. What happened with LTCM is happening right now across the political and economic spheres in virtually all nations. You have a collection of self-assured, arrogant experts running the world into the ground with their policies. S2PMS note, LTCM failed because it mistakenly believed the world of students' distribution bell curves applied universally. They don't. Global technocrats make a similar mistake, applying their old world metrics to build a new world where they don't apply. The British people recognized that they couldn't remove these technocrats from power from within, something proven once and for all by the fact no EU leaders have resigned. So they decided to leave. I commend that choice, and I think the sooner the status quo is disposed of, the greater the likelihood for a positive, long-term outcome. The experts have warned us of the disaster to befall Great Britain should it Brexit. Well, we now have front row seats from which to observe the outcome of the UK versus large economies that remain in the euro, such as France, Spain, and Italy. As usual, I suspect the experts will be wrong. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.